Welcome to Pie Uncut, where we break down the biggest stories in tech, business, and the global economy in a way that actually makes sense. Today's story is something almost everyone can relate to. Netflix is raising its subscription prices again across all plans in the United States. And while this may sound like just another price hike, it actually tells a much bigger story about the future of streaming, competition, and how companies make money in the digital era. So what exactly is changing? Let's start with the numbers. Netflix's ad-supported plan is now priced at $8.99 per month, up from $7.99. The standard plan jumps to $19.99, and the premium plan now costs $26.99 per month. That means users are paying anywhere from $1 to $2 more every month depending on their plan. At first glance, this might not seem like a big increase, but over time it adds up. And more importantly, this is not a one-time move. Netflix has been steadily raising prices for years. So the real question is not just why prices are going up. The real question is why can Netflix keep getting away with it? Let's break it down. First, understand Netflix's business model. Netflix makes money primarily from subscriptions. Unlike platforms like YouTube, which rely heavily on ads, Netflix depends on users paying monthly fees. That means one simple thing. If Netflix wants to grow revenue, it has two main options. Either it adds more subscribers, or it charges existing subscribers more. And here's the key insight. Subscriber growth is slowing. Netflix already has more than 325 million subscribers globally. At this scale, it becomes harder and harder to find new users. So instead of focusing only on growth, Netflix is now focusing on monetization. In simple terms, it is trying to make more money from each user. And that's exactly what this price increase is about. Analysts expect this move to increase Netflix's average revenue per user in the US and Canada by around 6% in 2026. That's a significant boost without adding a single new subscriber. Now let's talk about what Netflix is doing with that extra money. The answer is content. Netflix is planning to invest around $20 billion into content development. That includes movies, series, live events, and even new formats like video podcasts. Yes, Netflix is no longer just a streaming platform. It is evolving into a full-scale entertainment ecosystem. We're talking about live sports, interactive shows, games, and even experimental formats designed to compete with platforms like YouTube and TikTok. This is a major shift, because the competition is no longer just Disney Plus or HBO Max. The competition is now everything that captures your attention. Now here's where things get interesting. Despite rising prices, analysts believe most users will not cancel their subscriptions. Why? Because Netflix still delivers strong value. Compared to traditional cable TV, Netflix is still relatively cheap. And more importantly, it offers a massive content library that people actually watch. In fact, Netflix has one of the lowest churn rates in the industry, around 2%, compared to 6 to 8% for competitors. That means most users stay, even when prices go up. This gives Netflix something very powerful, pricing power. It can raise prices without losing a significant number of subscribers. And in business, pricing power is one of the strongest advantages a company can have. But there is a flip side. Consumer fatigue is starting to show. The term streamflation is becoming more common. As prices rise across platforms like Disney Plus, Apple TV Plus, and others, users are starting to feel the pressure. And that's leading to a new trend. People are exploring free alternatives. Platforms like YouTube, Roku Channel, and Tubi are gaining popularity because they offer content without a subscription fee. This creates a long-term risk for Netflix. If prices keep rising, users may not cancel immediately, but they may downgrade plans, or they may spend less time on Netflix and more time on free platforms. And that can impact engagement, which eventually affects revenue. Now let's zoom out and look at the bigger picture. This price hike is not just about Netflix. It reflects a major shift happening across the entire streaming industry. For years, companies focused on growth. They spent billions to acquire subscribers, often at a loss. But now the focus is changing. Profitability matters. Investors are no longer impressed by user growth alone. They want profits. And that means companies need to generate more revenue per user. Netflix is ahead of the curve in this transition. It has already introduced ads, it has cracked down on password sharing, and now it is increasing prices. Each of these moves is designed to improve margins. And so far, it's working. Netflix reported strong revenue growth, including around $12.1 billion in a recent quarter. So from an investor perspective, this is a positive sign. Higher prices mean higher revenue, and higher revenue can lead to higher profits. But from a consumer perspective, the story is different. Users are paying more for the same service, and over time, that can change behavior. So what should you take away from all of this? First, Netflix is no longer chasing growth at any cost. It is now focused on making its existing business more profitable. Second, the streaming industry is entering a new phase, a phase where price increases, ads, and monetization strategies become more aggressive. And third, this trend is not limited to Netflix. It's happening across the entire digital economy. Whether it's streaming, cloud services, or software subscriptions, companies are shifting from growth to profitability. Now the big question, is Netflix still worth it? The answer depends on the user. If you watch Netflix regularly, it still offers strong value. But if you're only watching occasionally, you may start questioning whether it's worth the price. And that's exactly what Netflix is trying to manage, raising prices without pushing users away. So far, it has succeeded, but as competition increases and consumer behavior evolves, that balance may become harder to maintain. This is Pie Uncut, where we break down complex stories into simple insights. If you found this useful, stay tuned because the future of streaming is changing fast, and this is just the beginning.